High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, welcome to our live trading workshop webinar. Today I'm here actually looking at the euro dollar trade at the moment. We've got actually two positions here. I need to put this signal on the Telegram channel as well. I guess this one, I think it ties in very well with our topic today, fear of missing out, isn't it? So you see over here, we got the 16 pips over here in terms of a target. So what I will do is I will put this one here first. I'm not sure if you're going to get a retracement here, but we will do on a close 1.1310. I did put a small position over here as well, but I've got a bigger position over here. I think the first one was actually risk managed wrongly, but we'll come all to that anyway. So this is a good one to learn in real time what happens. So on the close 1.1310, so I'll push this out over here. Let's see whether we do get this back or not to come and fill us. So over here, this is being supported by Trade Nation over here. So let me do this one here. 1.1310 is what we are having. And then the price we are looking at getting is in terms of the, let me see where we are at. So close 1.13, it's about 5 pips away, isn't it? I might put one to trade over there. Just going to give you a, I know there's some new people also joining us for today. So we will show all of that in a minute. Now, let me just get this price right here. I'll explain everything very shortly. I've got some trade positions on gold as well. So let me just really do that. Now, let me just quickly do this one here. So in terms of the stop loss over here, 1.75 or 1.5, isn't it, times, or 2 times 16. So let me just do that for now. So 2 times 16, close 1113.10. 1113.42. 1113.42 is what we are having. Let me just push this on Telegram channel first, and then we can start to take a look at everything else. And then after that, the target, I'll do it for 1 ATR. So 11310, 11310 minus 16. So 11294. So 1.1294 is what I'll be looking at. So good. So I've got that out onto the Telegram channel. Over here, what I will do is I will just copy that over for you guys to see. This is the example. I know some of you are already in this trade. You've seen that according to the rules I've been talking about in our previous positions. So that's all good. Now, let me just do this one here. So just to give you an example, 11342. And the take profit is 11294. Okay. So that's what we got over there. And then we got this one here, modify or delete order. So we got that one. I'll put the stop loss here just in case it comes back. 11342. And then take profit 1.1294. Okay. Good. So we got that out of the way. So what I've got is, I've got one which we had to enter kind of a little bit because it was running away from us. It was about 4 pips from our entry. So I put a smaller position in there. Should have been a bit more bigger. I did the position sizing wrong. That's fine. And over here, I put another bigger position here, just in case if it comes back, okay? Doesn't look like it, but we'll see how that goes on. Right, so that's that one there that we have over there. Let's see for those guys on our Telegram channel if it does pull back or not. I'll explain all of this in a minute on how we actually took this trade, okay? Now, in terms of the live trading workshop webinar, what is our usual format that we do? We look at some live trading trades at the moment, some potential trades that are happening in combination of price and volume. So it's with the SMI and the VSA from the trade guider team, okay? The SMI is where we got the tops and bottoms quantified here. And then the volume is from the trade guider team, from Gavin Holmes and his team over there, okay? The second thing we'll also be looking at is a topic, and the topic is fear of missing out. How apt is that today? As you can see all of this, I'll go through all of this right now. And then the other thing is, the third thing is, if there's any questions and answers, we'll be happy to answer them. All right. Okay, good. So with that, welcome to our live trading workshop webinar. We're going to be covering this and more in this actually session, this live trading session. It's still not on here, founder of Master the Markets, Elite Trades Conference, and the Traders Open Day. Okay, so let's analyze quickly this trade. I also got a gold trade as well here that we are taking a look at. So let me see over here, gold. I did take a look at gold being towards the long side. Yes, it has taken out the upper stretch. So let's go through all of this. I think I had silver as well. How's silver doing? Let me see if silver is giving us anything or not. No, that's still towards the downside. It did show a bit of towards the upside. I'll keep an eye on gold actually, and we'll work gold out together on this session. So let's carry on with this. Very quickly, let me give you the understanding on euro dollar. What was the basis of the trade? What I'm also going to do, traders, I'm going to just transfer this over all the levels here so that you guys can have a good representation as well of where the price is at the moment. So let's take a look at that together. Let me just go back to here. Good. So let me just put this in here. Actually, do I have something here? Do I have a blue line? Yeah, I got that. So I usually put the blue as the entry and the target here, and then we will put all this together, right? So I'll explain the reasoning behind us taking this trade so that you all can also understand why we did what we did, okay? So close 11310. So, okay, 11310, right? So this is good. And then the stop loss is for 1113.42, okay? 1113.42, right? And then after that, the target is for 11294, okay? 11294. That's what we got at the moment, okay? So it's very close to our target of just 180R, okay? So what was the reasoning behind taking all of this trades? So this is where all our trend alignment tables comes in, okay? The only reason why this trend alignment table, we are quite confident on it is that because we have first quantified what a top and a bottom is according to the smart money indicator framework, okay? This can be put on any time frame. As you can see, there's an orange arrow and then there's a blue arrow here, okay? So in terms of that, what we are really looking for is that the orange arrow is identified by when a top is confirmed, and the blue is when the blue and the bottom is confirmed by the blue dot, okay, over here, right? So what do we have in terms of that? We have quantified what a bottom and a top should be, and we got those formulas from the quant traders from the 1960s, 1970s, they developed it, okay? We were very lucky to come across them and they gave us that. Now, with that quantification, and that is where we got invited to many prestigious companies and institutions to come and talk at, including the STA, where we've been lecturing for their diploma students. STA is Society of Technical Analysis, which has got a presence over in 150 countries, okay? And Ninja Trader, which has got over outreach of 1.5 million traders. We've done so many interviews with them. You can watch all that on our YouTube channel. Now, once you have quantified what the top and bottom is, which is the edge over here at Master the Markets, then what you can then do, you can find out the trend and the phase very simply, okay? The trend, as most of you all know, in a downtrend, there's going to be lower lows and lower highs, right? And in an uptrend, it's going to be higher highs and higher lows, okay? Everybody says that, but then you see, think about these traders, right? But if you don't have a quantified top and bottom, then it just becomes guesswork, because you see, if I take away the SMI from the charts, you see, now you can't see any trend or anything. So it becomes all subjective. So if I were to show this to a classroom of 10,000 people, some people will say, you know what, I think that's a top. Some will say, no, I don't think so. I think this is the top over here. And then some will say maybe that's a bottom. Some will say not. Some will say this is a bottom over here where it just went up. And some of the thing gets very worse when you're trading in real time like this, right? So you're not even sure, you're guessing all the way. So what we do is to remove the guesswork. We know that to say that something is a higher high, right, than another, you need a reference high. And the reference high, as long as it's validated by some kind of quantitative structure, then it becomes a bit more reproducible, higher chance of it reproducing. At least you got a framework, okay? That's the first step. This is what I lectured at the STA as well, okay? And they were really blown away by it, because the way the quant traders have designed it is incredible, the way they've thought about it and everything. So that's the first step. So once I put on the quantification of the tops and bottoms, now you got a structure, okay? I'm not saying this is the holy grail, but at least you got a framework that you can base this on. And then over here, then you got the trend and the phase on any time frame that you can then align it with, okay? That's your first data point that you can get. So let's put that all onto the table. And remember that, just to refresh all your memory for those joining in again, or those joining in for the first time, remember that what do we mean by phase one? Remember, in any trend, the price never moves in a straight line like this, right? So what it would do is it will go down a little bit, then it will come back up again, right? Just like what it did over here, okay? And that part where it pulls back, or the retracement, or whatever you call it, because it's going against the direction of the trend is now downtrend, but it's going against it, right? It's going up. We call that phase two. But we do it in a quantitative way, in the sense that only after the bottom gets confirmed, that's a bottom to top move, and that is your phase two. And after the phase two, if the trend sustains, then it will come back to phase one again, okay? That's all. So we're looking just at phase two, phase one, phase two, phase one, that's all, okay? So very simple like that. So phase one is in alignment with the trend. Phase two is against the trend, okay? So that's what we're looking at. Now, in terms of the uptrend over here, then the same thing over here, okay? So the bottom to top will now become a phase one, and this will become a phase two. That is, in essence, after you got the framework, you can get that in a quantitative way. So we will now align that all together here, right, on this table. Then you see what we are saying. Now, on the daily time frame, let me go back to here. So on the daily time frame, if I go back to here, let me just see. 11310, isn't it? Where is it at the moment? Yeah, it seems to be struggling to come back to there. Let's quickly take a look at the 15 minutes. Yeah, okay. I guess we need a little bit more patience. It might come back on the 15, so that'll be good. Anyway, so coming back onto the daily time frame. On the daily time frame, you can see this is an uptrend phase one. Okay, I can see over here, right? Uptrend phase one. Why am I saying phase one? Because bottom to top, it's in alignment with the trend. So uptrend phase one. Okay, so that's the first part. So I'll do that here. So uptrend phase one. Okay. Now on the 4-hour time frame, let's take a look at this. Here it's again, this is uptrend phase two. Okay, So it is retracing. So the direction is down, but the trend is still up. Okay, you got it? So uptrend phase 2, uptrend phase 2. Okay, but still in an uptrend because higher highs and higher lows, right? So you got that. So that's uptrend phase 2. Here on the 1 hour, that is a downtrend phase 1 at the moment. Okay, and then in the 15-minute, that's also a downtrend phase 1. So let me put all this into here. So here is uptrend phase 2. So I've got some ready-made one here. Let me just copy and paste that here. And then here it's got a downtrend phase 1 and downtrend phase 1. Okay. So now with the quantitative structure that we got over here on the SMI, on the smart money indicator, across all different time frames, you saw that this bottom and top quantification can be applied to any time frame, isn't it? Right? So according to that, what we then got is the first data point, which is the trend alignment. Okay, so from here, we first then start to think, okay, on the daily, it's an uptrend. So two time frames are in the same trend, but two lower time frames are in the opposite trend, right? In a downtrend. So then the next thing we look for, so the first thing is trend alignment. The next thing we look for is direction alignment. Okay. In terms of direction alignment, you can see over here that this is an uptrend phase 2. So the direction is actually towards the down without thinking about the trend yet. And then the 1 hour is towards the down as well. And the 15-minute is towards the downside as well. Okay. So 3 time frames at least are aligning towards the down. Okay. So this is not the end all be all before we enter a trade. We also look at what we call the stretch. All right. Now, on the stretch principle, this is based on bar range formation. On the stretch principle, you can see over here. So let me put this back on the daily. I got it only on the MetaTrader here. Those of you who are LTM Advanced members, you would have got the stretch indicator as well on that. Now, over here, you can see that in terms of, you can see a blue line and then a green and a red. So this is your lower stretch line, right? So in terms of the lower stretch line, it's taken out the lower stretch line, but not taken out the upper stretch line, okay? So what that means is there's a higher chance for it to make its bigger range from the open to the downside, okay? I know some of you already been messaging me saying that you're not sure some of the terminologies. Don't worry, I'll give you some reference videos in a minute. So over here, so this one is on the low side, what I got. I'll just copy that. Just want to do that. And here, 1 ATR is what we go for. And the 0.8 ATR range, it hasn't formed that yet. I just looked at it just now. Entry bias would be towards the short. The reason for it is because the 3 time frame direction is towards the downside. There's a lower stretch as well, right? And all is aligning as well as volume. So I did take a look at volume as well just now from the Trade Guider software over here. So what we can see over here, in terms of the volume as well, you can see that there is a red dot here as our confirmation happened. Usually when we see the confirmation with the red dot from the VSA light happens, then is usually more stronger the signal. As well as we are looking at some volume. The volume isn't the textbook example what I want to see, but in terms of at least going past the second relative moving average is still towards the upside as we can see. Okay, strong volume at least above the second relative moving average towards the downside, which is what we are seeing. The other thing what I also look at, let me go on the 15-minute, and the reason why it's not really easily going towards the downside. I did take a look at this just now, because on the 15-minute, it's a bit overextended. It might do a pullback before it comes back further down, okay? So you might need to wait on this, or it might go further down. We don't know the order route, so we'll wait patiently on that. But in terms of this bottom or this top sustaining, we didn't have any big spikes, but it's okay. It was towards the second moving average, which then aligned with everything else, which caused this nice move. Those of you who understand the strategy, you would have got in a bit more earlier over here as well. This is one of the things why we want our team to also expand in terms of our intraday trading team as well. So if you want to join us on that, we can teach you all these rules. do email us on clientservice@mastermarkets.net. Okay. So that one over there on the euro dollar. So we'll wait. So the volume is okay. It's good supporting. Let's wait and see how this one carries on. It's not the most perfect one, but it is supporting it. The other thing that I did want to mention is that, so we got the entry. Now, in terms of the target, how do I get this target, right? So what I do is I take a look at the OE tables. This is another important thing, important statistics that you can have because I've quantified the tops and bottoms, okay? So if I just do it for the phase one, so here, which we recently did, and then we got the ATR number, and then I can take a look at that, and then it will start to do it from 2010 all the way to now on the 1 hour time frame. So wait for it to arrange itself. So there you go. So you see what it's telling me here, the probability of it reaching a 1 ATR target, right? From the close where the start of the race is, where the blue line is, the point A, where how all the statistics have been designed, there's a 65% chance, okay? So that's what it's telling us, all right? But of course, with alignment of all the rules, this probability will increase. And those of you who've been on our Telegram channel, and you can join our Telegram channel if you want to as well, the link will be underneath, or the boys will send it out as well. Then you will see that most of our trades, there's about 80 to 85% reliability. You can go through all the trades that you've done from before. That's about the reliability it's got because we are aligning so many things together, right? So that's that one on the target. And then I can do that also on the stop loss as well. This is where it's very powerful. And that's what our clients really love it. And make really good understanding of their strategies and also trade with conviction as well, okay, for consistent performance. Over here, as you can see, if I put my stop loss about 1.75 or 2 ATR away, 97% of the time, I won't get stopped out before it gets to my target, okay? That's the whole idea, all right? Good. So we got all of that, traders, yeah, on this on how we did this particular trade over here that you can see on entry, stop, and target based on trend alignment and based on the SMI and VSA framework, okay, on the price and volume framework that you can see. Now, in terms of those of you who've been asking about where can we find out reference materials about this, a couple of things. So the first place to start will be 7stepstoctp.com, okay? So 7stepstoctp.com is the first place you need to get to. Put name, email, and then your number if you want to get live trading updates, and then click on this, and then that will get you to our free videos, okay? After you've clicked, you're not a robot, right? So after that, then you get the 7 videos. You can watch that at your own free time, okay? And then the other thing that you can also good, I mean, the one more thing I do want to add over here is that these 7 videos, right, they're based on principles, so it's not rigid. You can use this across any strategy that you're doing at the moment because this will give you a framework and a strong framework with the strong critical 3 statistics that you must know, which I briefly touched on, okay? So over here, it will go through in detail, right? So this is very powerful. I highly recommend it. Over 15 years of collated research together. The other place also you can do so that you don't miss out a live video, a live stream from us, go on to youtube.com/mastermarkets. Another thing what you can also do is click on the subscribe button here and then click on the drop down arrow and click on the all bell icon. This will ensure that you get all the notifications whenever we go live as well, okay? And those of you who've been asking me, okay, where do I find out about the stretch videos? Oh, it's over here on the stretch principle, okay, on over here, right? So you can watch that at your own free time. In fact, you can watch all the videos on the must watch. They're really, really good, all right? Okay, good. So that's that one there. And all our live videos, if you want to revisit them, you can also go under the live category here and you can go through the previous ones. Highly recommend you guys to watch the one on trend alignment tables over here. So this is very, very good and highly informative, okay, which will help you towards any strategy that you're doing. Right, so that's that one there on all the reference videos. So I would say the first place to start will be 7stepsctp.com. The other one also is our Telegram channel. If you want to see how our signals are doing, you can join that as well, okay? Good. So I've got that out of the way in terms of some of the questions that you guys were having. Now coming back into here, so let's take a look. So euro dollar is still towards our direction. I know the only thing is it didn't come back to our first entry, but at least we got the second entry for those of you who did get in. That will tie in well with my topic as well, fear of missing out, which we will cover. Now, coming back to here, in terms of the last ones I want to take a look at before I cover the topic for today will be on gold. Let me take a look at gold. Am I getting anything quite clear here on gold? Let's do this together. Gold, I've got silver here as well. Let me just do gold then. So let's put this together. Let's see if it's quite clear or not clear. So we got the downtrend. Now, the first thing I also take a look before I even align all the tables, I quickly take a look if today's bar, the range has formed or not, okay? What do I mean by that? Now, if I take a look at the previous bar here, the range of it is $57, yeah, the average range. So 80% of the $57, so 0.8 times 57. So if I take a look at that, that's 45.60, okay? So it's 45.60. Let me just show you that. So I just did 80% of the range, okay? $45.60. Now today's bar, there's a handy tool that our client did for us. It's done $33, okay? $33.90. I can read from here. The bar range over here is done $33.90, okay? So it still hasn't done its 80% range. So good. So there's still a bit more range to cover. So maybe then I can see if I can capture that range or not, whether to the upside or to the downside. Now to form the bias, whether to the upside or downside, now I start to take a look at the different time frames. So let's take a look at that now. So on the daily time frame, I've got a downtrend, phase 2. So let's do that. So downtrend, phase 2 on the gold. Yeah, so it's still there. Downtrend, phase 2, right? And in terms of the 4-hour time frame, we got, again, downtrend phase 2 as well. So we'll do that as well over here, downtrend phase 2 on 1-hour time frame. 1-hour time frame, let's take a look. We got uptrend phase 2, right? Uptrend phase 2. Was it uptrend phase 2? Let me see quickly. Yeah, it is uptrend phase 2. Yeah. And then 15-minute time frame. 15-minute time frame. Let's take a look. And I've got uptrend phase 2 as well. Okay. So I've got uptrend phase 2 as well. Okay. So now, in terms of the stretch, right, let me take a look at the stretch. Stretch is taken out the upper stretch over here. Okay. It's taken out the upper stretch. That's what we got. And in terms of the range, it hasn't formed the range yet as well. What will be my bias? So let's take a look. In terms of trend, two time frames are towards the downside. In terms of trend on lower time frames, it's on the uptrend, on the upside. So we got 2 against 2, okay? So really can't form a bias there. Now let's take a look now in terms of trend, direction alignment, sorry. Direction alignment. So over here, downtrend phase 2 means towards the upside. Downtrend phase 2 towards the upside. 1 hour is on the downside, uptrend phase 2 on the downside. What do I mean by this? As I said, uptrend phase 2, so it's top to bottom, direction is towards the downside, okay? But the direction is towards the upside. Again, I'm having a 2 against 2. Now, the other thing is also, but I'm having a stretch which is taken out to the upside as well, okay? So when I really look at it, I'm really looking at towards the upside over here, okay, because of the stretch on what it has shown at the moment. But there's a couple of things you got to see. I'm not really seeing a very clear bias here. I'm going to take a look at volume as well in a minute. But another key things that I will also take a look at is if I take a look at the distribution here. So this is about $11 compared to 22 at the moment. So if I did do my range, so this is a bit more advanced, but you'll watch it at the stretch principle videos. Now, if I do take a look at this, let me see. 80%, 50, 80% of 57 is $45. So out of the $45, if it were to do 27, 25, and then 20, the ratio is not that great. So I would love the ratio to be to the upside. So to be honest, my bias here I would love it to be to the upside over here. So I will keep a monitor on this, but I won't enter on this long until I get this bottom confirmation on the 15-minute time frame. Okay. And if I do get that, then the first thing I will be taking a look at it for it to take out the high of this particular thing, because if it takes out the current high on the 15-minute time frame is on your daily time frame the high of this bar here, right? If it takes out that, then there's a very, very strong chance that the opposite side will become the stretch, and then that side will become the bigger range from open, which will go on to form the range for the day. This is ideally how I would like to project going forward of this bar formation. Okay, this is what I will be looking for, because then it will fit with my ratios and all of that. Now, whether I do get that or not is a different question, but I have to have patience towards that. Okay, so this is what I'll be looking for. So let me now combine that with volume also. Before that, let me just quickly take a look on the euro dollar towards the 11303. So it's dancing around there, still not coming to our entry, but we got at least one small position in. It doesn't look like, I think it will go towards its target. We'll wait and see how that plans out to be. If it does come out, come back in here, then you guys have been waiting patiently. We'll also get another position to get back in, okay? So that one there, now in terms of the gold, as I said, I'll go and take a look at the volume here. The volume, this handy thing that was started by Tom Williams and then now headed by Gavin Holmes and his team after the late Tom Williams. What you can see over here is that traders on the gold, I can easily see if there is volume backing this entire move up, right? According to the SMI and VSA framework. Now, just one thing I just remember, those of you been asking about how do you get hold of both of these indicators, SMI and VSA, you can always go on to this page over here and you can read on it, and then you can take a look on how you can get hold of it. If you got questions as well about it, then you can always email us at clientservice@masterthemarkets.net. Okay, good. So coming back onto here again, and to get to this page over here, you can go to our website, masterthemarkets.net. Type in the URL address because there's some issue on the Google at the moment. It's being rectified, but if you type in www.masterthemarkets.net in the URL address, not on Google, on the URL address link, then you'll get onto our page. And then after that, then you can then see over here, if you go on to SMI and VSA, then you can then go and look at that. Okay, good. So you got that one there. So let me take a look now at the volume here on gold over here. So now this is something that I would like to see. So you see over here on the 15-minute time frame, there's a volume spike over here, right? On the bottom here. Now, if that bottom holds and I do get a bottom confirmation with a blue dot, now that is when everything aligns for me and I would take a position towards the long side with my bias aligning. But if I do not get that, then this is not the trade setup I'm looking for. I would let this go, okay? And even if it does go short and further down, now that's not my trade, okay? I don't have any fear of missing out. I will be totally content, okay? The time when I do get fear of missing out is when the trade is all according to my rules, but then I was late to come onto the desk, or I was late in capturing being on the desk at the open, and then I've missed it. Okay, so that's when it will kick in, but there are some ways to overcome that. So so that's the thing on gold over there. I'll quickly take a look on the 1 hour as well. Yeah, currently is towards the downside. Not really strong volume on the seller bar, which could mean that it could level off. But you know what? Let's wait and see how that goes off. But if you don't get the entry, then we have to back off. Okay, so that's that one there. So I've given the explanation on that one. In terms of silver, I had another look at silver as well. Silver, you can do the same analysis on silver as well. We did take a trade last week on silver, and it did go to target, but it had to wait a lot of time before it went there. A lot of volatility. If you've missed that recording, you can definitely watch it on our YouTube channel. Okay, so in terms of that, it's pretty similar. I'll let you guys do this as homework to see why this would be a viable trade after you've put all the alignments together. Okay, very important is if you want to do this in clarity and with confidence, you need your tops and bottoms quantified. Okay, this is very critical. Right. So with that, I think that makes me move on to the topic for today, right? On the fear of missing out. All right, the fear of missing out. So this is a good one over here because we've got a live example here as well on the fear of missing out. So I've written some points here. So what do we say is, what does it mean, fear of missing out? It's quite obvious from the word itself, isn't it, not traders? Yeah. So we saw it over here just as we started over here into the session. We did see an entry position here, but the trade was going on quite quickly. And it was 5 pips away from our entry. So at that moment, you know, does the fear come out? Oh, if, will I miss out on this? You know, will it go to my target without me? Will I lose that profit? And all of those questions will come. This is what we mean by the fear of missing out. Now, I want to go a bit more deeper. Now, when does usually the fear of missing out happen? Okay, the fear of missing out usually happens, for example, let's take this example, right? Let's take this example. The fear of missing out usually happens, let me rub this off a bit. The fear of missing out usually happens when you want to enter here, but then the trade is going quickly, right, away without you, and usually when it's in your favor. In this case, it's, let's say the close is around here, then the fear of missing out will start to happen, right? Because it's going away without you. But usually, when the other scenario happens, you won't get a fear of missing out. So let me draw that one. So over here, we have confirmation bar. Let's say you were late to the desk, and it does this. And you'll be like, oh, thank God I didn't enter that. It's coming against me, right? Now, so when does the fear of missing out happens? Usually when the trade goes in your favor, okay? But what I want to bring to your attention is that even if it's going in your favor, remember, that is still temporary. You don't know what's going to happen after that, right? So that's the critical thing. So you got to analyze this and go a bit more deeper. Now, the next thing will be, why? So why is it understanding this fear of missing out critical? Because if you don't really go deep and understand this fear of missing out and entering into trades on impulse, then what it will do is that it will just give you results which are basically not moving you towards consistent performance, okay? Because you would have a strategy that is, or strategy, or maybe not even a strategy, because some of the clients that come to us say, when we ask them, do you even have a strategy? They say, no, I haven't got anything written out. Or some people who do even have a strategy, they say they have a strategy. When we ask them, have you written it out? You know, have you analyzed each of the 5 components of the strategy? They would say, no, I have not written it out. It's all in my mind. And what do you mean by the 5 components of a strategy? So they're not even sure about what strategy construction is, right? So all these things start to happen to people. And this is why the fear of missing out happens. Now, we come to the main question, isn't it? Now, how do I overcome that? How do I overcome the fear of missing out? A couple of ways. So the first thing what you got to do, right? You have to write the rules specifically on how much leeway are you going to give before you let the trade go. Okay, what do I mean by that? So for example, in here, so I had a live example here, right? So here, this is where the entry should be, right? This is where the entry should be, right? And then here, what I'm saying is, how many, what distance from here, okay? At what distance? Let's say you missed that entry. You're supposed to enter on here. You missed that entry. And it's run away from you by, let's say, 10 pips, 10, 15 pips, whatever it is, 10, 20 points, whatever it is, right? Will you still chase it and still enter around there? At which point will you say, you know what? No, I've missed the train. I'm not going to enter. Or at which point will you say, you know what? That's the leeway I've given. That's fine. I'll still enter it. Yeah. So all these things you have to understand. Now, one thing that I can give you as a guideline for this is, think about this, okay? Will you rather let a trade go if you have missed about $10 off your entry? Okay, so if you entered here, you'll be $10 more up. But if you entered here, you'll be $10 less. Okay, but would you rather let go of $10 to gain $1,000? Would you let go of $10 to let go of? Would you rather don't mind entering $10 late and still getting $1,000, or would you rather say no? I want that $10, right? I want it to be exact, and I don't mind even if it goes towards my target straight away and I miss $1,000 of profit. Okay, so this is what you're going to ask yourself. Keep asking that number of how much you're willing to let go and the profit as well. Then you'll be able to get it. Some guidelines I can give you is you can think in terms of ATR as well, or in percentage profit as well. So for example, $1,000, I would say maximum you can give up about 10% of your profit. Okay, so if you're $100 late, it's fine. That's a guideline. Or you might just say, no, I don't like that. I would like 5%. But whatever you do, the magic word here is consistency, right? You got to consistently execute it. This is, if there's any holy grail in trading, that is it, the consistency. Okay, that will balance all your numbers out in the end towards the profitability of your system. Okay, right. So that's one thing. So you have to define how much leeway you're going to give before you enter the trade, even if you miss the entry. But even saying all of this, I will tell you that I'm guilty myself of this because I usually like to be perfect. Okay, I don't like even missing $10. I would like to be perfect, and I like to put the limit entry, and I would say, you know what, it's okay, we'll come back and come back. And tomorrow, when I see that it hasn't come back and it just straight away go to my target, I'll be like, oh man, was it really worth it? You know, for that $10, for it to come back for the $10 and to be exact. So over time, I realized that, you know what, let's write down the rules, let's drill it into the mind so that we remember and we execute it as well in real time. Okay, so remember, this psychology thing is work in progress all the time. I won't say I'm perfect, but I always do different things to get myself into this habitual pattern where it becomes secondary. Just like driving, isn't it? Today, nowadays, we would just drive automatic, right? Automatically, you're subconsciously, you're habitualized yourself to do the clutch, you know, accelerate, and the gearbox and all of that, right? But today's world, of course, is all automatic mostly, but still, you get the idea of what I am saying, checking the mirrors and all of that, even though it's an automatic car. So that's the one thing that I would say. Write it down and really contemplate on this and get very clear. The other thing that is very important is that you must always understand is that the fear of missing out only happens. Now, this is very important, right? This is very important. The fear of missing out only happens when we think in terms of one trade. Okay, we think that this is the trade, this is the end all be all. We just think in terms of just one. Okay, we think that this is the trade that will that's got to make the money. When we think in terms of one trade, and you just think that okay, that trade is going to be profitable, you're subconsciously telling yourself that you're going to have a 100% reliable system. And we all know that's not possible, is it, traders? This is a facade, right? You have to go deep into your mind and really understand this. This is not. If you keep thinking that, oh yeah, you know what, I'm going to miss it, I need to chase it and all that, that means you only chase it when your mind knows, as I said in the beginning, that you believe that that trade is going to go towards the target and you're going to make money, that's when you chase it. That's when all this happens, the fear of missing out, because you think that that is going to win. But remember, trading is based on probabilities. If it is based on probabilities, you shouldn't keep thinking in terms of one trade. You shouldn't. Because if you keep thinking in terms of one trade, you're always thinking that you're going to be right all the time. And that doesn't happen. You and I know that. Not any strategy over there is going to be 100% reliable. Not even Ray Dalio's or Warren Buffett's strategy is not, right? So it's just not going to happen, okay? So that's the first thing you have to understand, right? It's just not based on one trade. Trading is based on probabilities, okay? Trading is based on probabilities. Talking about that, I just realized that the position has just been triggered, okay? For those of you on a Telegram channel, all the patients, that has been triggered at the moment, okay? Right, so that's the first thing. You have to understand that this is not based on probabilities. Now, if it's based on probabilities, sorry. So it's just not based on one trade. Now, if you do understand that, then you do know that the whole trading game is based on law of numbers. You got to run the numbers, okay, for the edge of your system to materialize itself. This is the key part. You have to run the numbers for the edge of the system to materialize itself. So it's no longer just about that one trade, it's about 20 trades. And over the 20 trades, then you get an 80% reliability, and which then will give you the winners outriding the losses, and then it will become total gross profit overriding total gross loss, and then giving you a net profitable system. That is the whole idea of trading. Understanding all of this with the help of a mentor as well to drill it in and having accountability will get you towards consistent trading performance, okay? This is the whole idea. Right, so now, as a recap, so what did we cover over here? So let's go through this. So in terms of fear of missing out, I talked about what is it and when it happens, okay? So you all know that as well. So here, the second thing also that we also covered over here is that why is it important to know it? Because if you do not know it and you just keep chasing trades, then your whole strategy system is not going to realize its edge. Then the number three is how do you avoid it? One thing I told you is write down the rules on how much leeway you're going to give, right? In terms of ATR or pips, doesn't matter. ATR is better because you can then cross-transfer it to other instruments as well. The other thing I also said is based on probabilities, okay? Just don't keep thinking in terms of one trade. That's when it all goes haywire. Now, even this trade is a very good example here, right? So those of you who waited patiently, you have come now a trigger over here. Those of you who were in the trade as well, now you will see unrealized loss here as well. So all this is good things for you to reflect on what we have seen over here and gone through the points, okay? So you can see over here, all that profit that we saw, now you see is unrealized loss at the moment. But why should we stick on with it? Because we got a strategy with his edge and we keep running the numbers. It's just not about that one trade, okay? So this is the whole idea. Right? Okay, good. Now that you guys have understood all of this and I'm aware of time, if there are any questions as well, now is the best time to type it in. Let me see. Right. Okay. Good. So now the only question that is mainly happening is you guys are asking about the gold, right? The gold. Now, Tiro, what gives you the confidence that this is not going to go any more shorter and we should be looking towards the buy side? I mean, the answer is what I just went through before, right, traders? So over here, I looked at the trend alignments, right? And I looked at the stretch as well, and I looked at the range and the DRO, the stretch ratio, okay? After looking at all of that, I also took a look at volume. Now, this is a great textbook example. Very good volume spike. I love this. Potential buying indicator coming in as well. Correlating with all the trend alignments that we just saw on the bias and the upper stretch and the ratio. So all I will wait for now is wait for this to confirm its bottom with a blue dot. And if it does that, then I would then take it accordingly, right? In terms of towards this one ATR target or towards the range of the day, okay? So this is what I will start to take a look at. So to go through all those points in a systematic way, what I would suggest is traders is take a look at 7stepsoctp.com, okay? Name, email, after you put your contact details, you will get this 7 videos sent to your inbox. If you don't get it, check your junk inbox folder, and I put it onto the safe list so that it doesn't go there ever. Also, emails will teach you how to do that as well, how to put it to the safe list. Now, the YouTube channel, youtube.com/master the markets, is another one as well that you guys can take a look at. Over here, the first one I would highly encourage you guys to look at after you watch 7 Steps to CTP, I would say take a look at this one here, the stretch principle, okay? The stretch principle, right? Take a look at that. That's very good. And then, of course, then go through all the other must-watch videos there as well. Really powerful videos over there that are based on principles, not rigid, based on principles that you can apply to any strategy that you are doing. Then the other thing that you can also do, you guys are asking, okay, how do I get hold of the SMI and VSA indicators, which are so powerful? You can go on to the link that the boys have provided, the team has provided, and then you can go through that and then look at how you can get hold of it as well. And then if you got any further questions on it, you can always email us on clientservice@masterthemarkets.net. Okay. So I guess that's pretty much that from me. I will keep an eye on these trades over here on euro dollar. The euro dollar is still dancing around there, so we'll wait and see. I believe on the 15-minute that would have confirmed that. Let me just take a look at that. My hunch is that it will probably confirm its bottom before then coming back further down towards our target. But I might be wrong. Order route is something that is so hard to predict. So we'll wait and see how it all plans out to be. In terms of gold, I'll wait for that bottom to confirm. And those of you on the Telegram channel, you can see the signals come in and we will analyze them together. Okay. You can see that over here at Master the Markets, we are never shy of showing you the profits or the losses because we got conviction in the strategy over its law of numbers towards achieving the consistent performance. Okay, this net profitability. Sometimes some years also, you see, that's why you got to go deep as well into your drawdowns and everything. We cover that in our different programs and everything. But take it step by step. I don't want to give you all too much that you all get too overloaded and bombarded. But take it step by step. I would say a very good place to begin with is 7 Steps to CTP. And if you've seen it as well before, I would say go and revisit it and book a one-to-one session as well. If you got any questions, you can always book a one-to-one session. And one small request we'll always ask is that we are always strong in pledging the spreading the truth of trading and not hyping anybody for becoming millionaires overnight and all that. We don't believe in all of that. Me and Gavin, we don't. We share the same values and towards giving the truth of that of trading. So those of you who are anytime watching these videos or whatsoever, just click the like button. It will really help boost the video up and then also to spread the truth much more further out. Okay. Great traders, I guess that's pretty much that from me on this video. We will manage this trade and see how this carries on. I'll keep an eye on gold as well. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.